The bond market is sending out a red flag, and yet no one seems to notice. Investors think they've already weathered the worst, but what if this quiet phase is just the calm before a massive storm? It's unsettlingly still, but that's exactly what happens before big market shifts. You need to pay attention now because if the bond market breaks, it could send shockwaves through everything you know about the economy. Stick with me. What's coming next could completely change the game. This isn't just a random blip. What we're seeing in the bond market right now is part of a much bigger underlying pattern. The quiet before the storm, it's not an accident. We've seen it before. When yields stay locked in such tight ranges for weeks, it usually signals a massive shift is coming. And when that shift happens, it's going to shake up more than just bonds. It's going to rattle the stock market, the global economy, and everything in between. So why isn't anyone talking about it? What are we missing here? Here's the thing. When markets go quiet like this, it's not just a pause, it's a warning sign. The 10-year yield has been locked in its tightest range in decades, and this isn't something that happens by chance. In fact, this kind of pattern almost always precedes a major market move. So what happens if that break comes? We could see yields skyrocket. And when that happens, get ready. The stock market won't be able to escape the fallout. It's simple. When the bond market moves, the rest of the economy follows. The question is, are you prepared for what's coming? But here's where it gets unsettling. We've seen this before, and history doesn't lie. When these tight ranges finally break, they often trigger a sharp, sudden shift. Think back to previous times when bonds started moving dramatically. It didn't just impact one sector. It spread like wildfire, dragging down the stock market, crashing economic forecasts, and leaving investors scrambling. What's different now is that the conditions are even more volatile. With the Fed cutting rates and the global economic uncertainty hanging over us, the next move could hit harder than anyone expects. And if we look closely, there's a disturbing trend. Things are only getting tighter, and the longer this lasts, the more explosive the outcome could be. Now let's talk about the real kicker. This isn't just about a potential market shakeup. It's happening right in front of us. We're seeing evidence of contradictions between what's being said and what's actually happening. The Federal Reserve is supposed to be lowering rates, right? But look at the bond market. It's sending a very different message. If the bond yields spike, the Fed's actions won't matter. The market will take over, and it will demand higher yields. This is where everything starts to flip. What looks like a move towards lower rates could quickly become a catalyst for even higher rates. And that's when the real pressure starts building. And the pressure, it's mounting fast. Just look at what happened yesterday. What seemed like a promising rally quickly fizzled out. The markets were buoyed by positive earnings from Taiwan Semiconductor, but by the end of the day, the excitement had evaporated. The S&P and NASDAQ ended only slightly higher when they should have surged. That's a red flag. It's like the market is just waiting for a reason to drop, and any hint of weakness could set it off. You've got a mix of pressure points building up from the bond market to tech stocks struggling to hold gains. The question is, what happens if this continues? If this trend holds, we could see a massive sell-off in the near future, and you won't want to be caught off guard. Now let's zoom out and look at what this means for you. It's not just about the numbers or charts, it's about real people, real lives. If these markets keep declining, it's everyday investors who will feel the pain first. Think about your retirement, your savings, and your future. When markets tank, it's not just the Wall Street elites who lose, they can pass the pain right down the line. But here's where it hits home. If you've been holding on to stocks thinking they'll bounce back, the next few months could change everything. If this trend continues, you could be looking at significant losses. If you've seen the signs before, you know what comes next. Tell me in the comments if this feels all too familiar. So why is this happening? It's not just market fluctuations. There's a deeper system at play. The bond market, the Fed, the economy, they're all interconnected. The reality is investors and governments are pushing and pulling against each other, trying to keep things stable, but the cracks are starting to show. The Fed is supposed to control interest rates, but they're at the mercy of the market. And when the bond market sets its own course, the Fed has very little leverage. This is the power dynamic that's shaping everything we're seeing. The markets aren't just reacting to events. They're being steered by a system that's almost impossible to change. This insight, it's why you need to be more prepared than ever. Now let's look ahead. There are two paths we could take from here. On one side, the Fed could step in and try to calm things down, maybe with another rate cut or some other intervention. But even if that happens, the bond market could keep pushing yields higher, and that would mean more pressure on stocks. On the other side, we could see a full breakdown. If the bond yields spike, it could trigger a cascade of events, sending markets into freefall. Right now, it's impossible to predict exactly which way this will go, but what we know for sure is that we're at a tipping point. The question is, which way will we tip? One thing's for sure, the next move is already forming. So what's the takeaway here? The bond market isn't just a side story, it's the story. It's the signal that everything is about to change. The question is, will you be ready for it? Because when this storm hits, it won't just be a minor blip. It will reshape everything. The markets, your investments, the economy, it all hinges on what happens next. This is just the beginning, and if you don't stay on top of it, you might find yourself caught off guard. Make sure you're subscribed because I'll be keeping you updated with real-time analysis as this plays out. Stay ahead of the game and remember, the chart is the chart, no matter how wild the ride gets.